Matt, find one stock you like in the Third Avenue International Value Fund is Vivendi. It's down slightly this year, but it's getting a lot of positive sentiment from fund managers because they really like the Bolloré Group because of Chairman Vincent Bolloré. Why do you like it?
Yeah, well, we've owned the stock for about 3 years now, and we spent the last 2.5 witnessing large-scale dispositions to the benefit of shareholders. In the last 2.5 years, they've sold about 30 billion euros worth of businesses, so you can make money by shrinking a business as opposed to growing it, which has Bolloré written all over it in part. But today, as we look forward, the largest asset of the business is Universal Music Group, and as the world shifts from music distribution via downloads to streaming, the distribution chains are becoming increasingly fragmented, and the demand for content, which Universal Music Group has in spades, is increasing, so the world is really coming their way.
And you're also a fan of Global Logistics Properties. This is a Singapore-based owner of ports and warehouses. Stock's had a rough time this year, down over 30%. Is this just a problem because people are worried about China and global trade, or is there something more to it?
No, I think it's really just a sentiment issue, and I think you've got it exactly right between China and global trade numbers, which are not particularly good. But this company is one of the world's largest owners of logistics facilities, which are absolutely critical for things like fast-moving consumer goods and e-commerce, which is absolutely critical in China, but in the United States as well, where Global Logistics Properties is a big player. And we think that between development of additional facilities, which they have land for today, between rising rents at existing facilities where the fundamentals remain very, very good, and a move to an asset management type of platform, which the company is doing very quickly, they can compound value at double-digit rates, and we're paying something like a 30% discount to NAV today. And for all of those reasons, the company is very, very actively buying back shares in recent days.
And you're also bullish on CNH Industrial. They're in the ag equipment manufacturing business. Stocks had a hard time this year because agricultural prices are down. Will they turn around once you see corn and soy bottom out?
It may not coincide exactly with the bottom on soy and corn. What you really need to see is globally is farm receipts start rising, which happens with rising grain prices. And this is a business for which you can have a high degree of confidence that a normal operating environment will reoccur at some point in the future. The timing is difficult to predict, but we feel like we're paying a very, very modest multiple for a normal operating earnings for this business, which will recur with some degree of reliability.
And then finally, you're a fan of Telefónica Deutschland. Tell me about this one.
Right, we talked about it about a year ago. They had just completed a merger with one of their large competitors in Germany. This is a wireless telecom carrier, and the benefits of that merger have shown up in spades throughout the last year, showing improving operating performance and delivering on the synergies that they had thought they would be able to produce. Now, looking forward, I still believe what I said about a year ago, which is that this company ultimately needs to combine with a fixed line player in Germany, and I think that they ultimately will do that to the benefit of shareholders again.
Got to buy it in Europe, though. No ADR here.
That's right.
All right. Well, thanks a lot, Matt.
Great talking to you. Thanks.
And thank you for watching The Street.